right, it is time. I apologize that I'm late, but it is time for the Wolfer Power Hour. DW, Drew Wolfer, I'm your host. I had an unexpected call. It is what it is. I have a life. I have things to do. Sometimes I get caught up in those things, and it is what it is. And it ain't what it ain't. But we're going to talk about Bitcoin. We're going to talk about everything that is happening in the markets right now. We are going to talk about gold hitting a ridiculous new all-time high. If my stream quality sucks, I do not know what to tell you about that. There is absolutely nothing that I can do about the internet connection in the sunny state of Florida. There was a blood moon last night. We thought there might be blood in the streets after the blood moon, but apparently, dude, I mean, we've hit like so many green candles in a row. It's almost like it's questionable at best, right? But we're going to talk about all of the key levels. We're going to talk about a potential trade. We set up a potential trade yesterday. It has not gotten stopped out. Could it get stopped out? Absolutely. Any trade can get stopped out. I am a verified pro trader on verifiedinvesting.com, naturally, right? And even in there, I only have a 84% win rate. So that means anywhere from 18 to 16 trades out of 100, I lose on, right? And any trader that tells you that they win every trade is a friggin' idiot, or they're lying to you, or they're committing crimes and doing insider trading. So don't listen to them. 84% win rate is absolutely insane. Most good traders have 55 to 60% win rates. Once you get above 70, like you're an animal, right? And if you got above 80, like it's kind of an anomaly, right? But in verified investing, we have 80+% win rates. Almost every single person does, right? Like almost every single friggin' person. All these guys, right? Like, yeah, we all have what's it called? Verified YouTube. I don't know what the heck I'm going on. Verified, yeah. Yeah. Almost every single one of these guys has like an 80 to 80+% win rate in here. Like these guys are all animals, dude. So like these are the people that you want to be listening to and talking to, right? We did set up a gold trade as well, but we're going to talk about Bitcoin first. So with that being said, if you are here from Twitter, man, scroll up and hit the follow button. Okay. I don't even know if we're live on Twitter. Yeah, we're live on Twitter. Half of you are here from Twitter. Half of you are here from YouTube. If you're here from YouTube, hit the like button. Make sure you hit subscribe. Boom, baby. Bang on the notification bell. We're just going to jump right into it. If you've got any altcoins you want me to look at, drop them in the comment section. I know I was about 15 minutes late. We got about 15 less minutes to do, but we're gonna get into it now. You probably like I'm not even gonna like warm people up. You see what's happening, right? We've got an inverted potential head and shoulders, a potential inverted head and shoulders. Everybody can see that, right? Is it a very good looking one? No, it's probably a 6. It's probably a 6 out of 10. It's definitely not as good looking as my wife, right? Because my wife would be perfectly symmetrical. 10 out of 10, baby. 10 out of 10, right? My wife's hotter than my win rate inside of verified investing. With that being said, all joking aside, we have an inverted head and shoulders. What is the target on that, Drew? What could potentially be the target on this inverted head and shoulders pattern? Well, neckline's right there. If we get a neckline breakout, let's call it, somewhere around there. 75% of the measured move, we're talking 91 grand. This is where we start to get bullish, okay? Once you get above about 91, I think it was like 91.5 or something like that. 91.3, I believe, was my point where I was like, yo, we're bullish. That's where you start to get bullish because you start taking out all these lower highs. Obviously, I want to see us take out this lower high right here, 92,915 range, in order for me to start thinking like bullish nature, right? Now, here's the good news, okay? That's the inverted head and shoulders. Let's save this bad boy. Okay. That's the target on the inverted head and shoulders. We know it's what did I say it was? A 91K almost exactly? Yeah, something like that. Okay. We've taken out the 200 moving average, right? Actually, I need to show you one thing. We're getting a rejection at the neckline of this, okay? So we need to see a breakout above this neckline, a candle that closes above the neckline, right? So like, let's just draw it. Let me get my magnet tool off of here. So you need like a candle that closes above that neckline, right? Then you need a subsequent candle that comes after it that closes above the close of that candle, right? Like that, right? That's a confirmation candle. Then what you want is a breakout, probably a rejection here at 85.8 and a retest for a bounce, right? That's where you start thinking about longs. As it sits right here, this is where you're still thinking about shorts here, right? This is what it is, all the way up to, you know, probably 85.8-ish. But if you get that confirmed breakout, that's where you start thinking longs, okay? And this was the short that we had set up yesterday, where we have not yet got stopped out, you know, but I'd entered, where did I enter? We had our stop loss set up here, but I told people I probably wasn't going to enter right here and then to average in. Where's my entry? Hold on. Let me see what my average entry is. I think it's like almost 83 grand. No, over 84. Okay. So here's where my entry is, 84,018. Okay. So again, like I said, we have not gotten stopped out of this position yet, right? So we're going to see where it goes. But if we get above this 0.5 fib, that's where we're going to start getting stopped out, right? That's where we're going to start getting stopped out. This could be one of our 16% or 18 or 20% losers, right? Bitcoin's going to decide whatever it wants to do. As it sits right now, we're in drawdown, right? Because we entered at $84,000 almost exactly, right? At the 200 moving average. Why did you enter there, Drew? Well, I mean, you see it. You know, I started entering at 83,650, and then $84,000 is the 100 moving average, right? Yeah. Boom. Let's see what we got now. Now it seems like we have an upward kind of sloping trend line, right? Where if we break this trend line, it's not going to be good for us. Okay. Probably, I would say it's more like this. So essentially, as it sits right now, we need to stay above this 0.382 for this to be bullish, which means if, you know, we drop below $83,000, it's not looking great. Obviously, we have this horizontal line right here that is, you know, we do have a rising, whatever it's called. Give me 1 second. Make sure this thing is. Where's my document? Where's my handy dandy document? Give me 1 second. I'll show you what we have here. You can pick it out already, but you'll see what I'm talking about here in just a second. This is stuff that's incredibly helpful for me, at least. So hopefully it's helpful for you too. But if you look here, you'll kind of see what I'm talking about, right? We've got a rising channel, or not a rising channel. Give me 1 second. Where's my PDFs? All right, let's go to the bullish charting patterns. Does this look familiar? Does this look like an ascending triangle? I mean, for the most part. Here's the only bad thing, okay? And this is where you start to get contrarian signals, all right? And I hate getting contrarian signals and trying to trade during contrarian signals. Sometimes it's best to just stay out the way, right? And let's pull this FRVP off too. This one and this one, because this is a local FRVP, fixed range volume profile. Now, here's where you're going to start to get contrarian signals, right? Because what you can also see is a rising wedge, which might not necessarily be what you want to see, right? Because if you know anything about rising wedges, what tends to happen with rising wedges, right? They tend to break down, okay? They tend to break down, not up, all right? And especially when they come in during a downtrend. Now, this is going to look a lot like a bearish pattern too. So, again, right here. Look at that. I'm just saying, you've got a potential ascending triangle, but also a much larger bear pennant, right? And a rising wedge, right? So if we look at the rising wedge, it's right here. Where's that? It's a period of Bitcoin's got to make a decision. That's what it comes down to, right? And we got a rejection at the top of this. We got a rejection at this fib too. Where's my fib? We got a rejection at the 0.5 fib on this move, right? And then we have the ultimate high to the ultimate low, which is all the way up here to this ultimate low. And again, you front ran the 0.5 fib on that. What's the RSI doing? Overbought territory, man. What's the Stokes doing? Ridiculously overbought territory, man. You know, like, you got to have a massive push. You got to have a massive push. And here's my point. It's favoring downside because there's two bearish charting patterns as opposed to one bullish charting pattern, right? And until you get a breakout of this, you've got your second bullish charting pattern here, right? Until you get a breakout of this, that thing is inside of this big bear pennant, right? So this is the most powerful charting pattern that you have right now, right? And if you look at my document, my handy dandy document that I've offered out to people, and all you have to do is tell me that you want it, right? The inverted head and shoulders is inside of this big bear pennant, right? Which is not good. That means that this is a longer term and a larger charting pattern where, you know, we could be potentially breaking down rather than up. But again, like I said, period of indecision here. This might be a place where you don't take a trade. Unfortunately for me, I'm already in a freaking trade. So I got to manage my trade now because I'm probably down like $200, right? You know, who knows? I think I'm in like a half a Bitcoin or something like that at $84,000 on a short. Yeah. So if that's the case, then I'm down. What are we at right now? 84, call it 84.4. Yeah. I'm down like $200, right? Oh man. On a Friday Pi Day, dude. How are you going to be able to afford your friggin' Friday Pi Day with your family, man? I don't know. Hopefully I can afford my Friday Pi Day because I would really, let's not get wrecked. All right. There was a blood moon last night. Okay. So in any case, you get above here, you're looking bullish nature, right? I would say 85, 850. Okay. This is where things start to turn bullish and where you start to think about taking a long, okay? That is a short. Where's my long position? This is where you start thinking about taking a long position, okay? Why? Where's my media assets, dude? I haven't done one single media asset yet.
I've been doing this more than you. You ain't got the answers. You ain't got the answers. How, Sway? You ain't got the answers, man.
How, Sway? How, Sway? Why, Sway? You ain't got the answers. Maybe I don't. Maybe I do. Maybe go screw yourself. Kanye's hilarious. All right, so in any case, this is your long position if you break here. This is a really key point, okay? This is like a really key turning point, right? Say you bounce off of the 200 moving average here, the 0.382. You get up here, you're getting outside of the rising wedge, first off, right? And outside of that bear flag, but you're also breaking the neckline of the inverted head and shoulders. You come back and back test this 0.5 fib. That's where you enter your long position and target that, right? You target the 0.786. And then you see what happens. You might get a rejection up here at these previous highs right around here. Bing, bang, boom. See what I'm saying? So like, this is where this is a key decision point, in my opinion, right? Now, is it, you know, is this guaranteed to happen? No, absolutely not. I mean, we could absolutely just, you know, tank out from here and go right down here, back to 76,555, set a lower low and go into our demand zones, which are down here, right? Go back down to the previous all-time high, 73.6, right? That we've been talking about for a very long time. So in any case, right? You're getting a rejection here. Unless you get above this 85,850 level, that's where you start to turn bullish. That's where you start to think about, okay, I'm going to start going like longing things, right? Secondarily, if you look at the fixed range volume profile from, give me 1 second. Okay, so this is a bear pennant. Where's that other trend line, right? Okay, let's get all this stuff off of here. So now you kind of understand, like, you know, what we're doing here. Okay. Look at that, $86,000, 86.1. Yeah, I mean, you got to get above 80, in my opinion, even further than that. 85.8 to about 86.1 is where you're going to be seeing some bullish nature, right? That would be by Sunday. Okay, that's it. That's it. That's that. You know. So, but then also you have you know, you don't really have a wedge here per se, but you do have a falling wedge potential, right? That would take forever to play out. This would take absolutely astronomically long amount of time to play out, right? Or something like that. And that's all the way into April, right? So in any case, let's get that off of the screen. Where was I going with this? Fixed range volume profile, local. You're also getting overextended outside of this fixed range volume profile, and you're not confirming outside of it. If you get sucked back into it, you're going to lose the 200 moving average. You're going to lose the value area high of it. Next likely scenario is you come down here, you smash through the 50 and the 100, and you hit the point of control at 81.6, right? Then what happens? Most of the time you come down and you fill the rest of the range, right? Look what happened. Boom, you came down here, you almost filled the range, came up to the top, came back down to the bottom, got outside of it, boom, blasted up, refilled the range, right? Got a little bit of rejection at the point of control, came back down, filled the value area low, boom, up to the value area high, bing bong, filled the range again right down here, front ran it, boom, filled the range again. You see what I'm saying? And these fixed range volume profiles, I mean, these things are like, they play out a lot, you know? So it's something to be cognizant of, right? But we are in we'll call it a micro downtrend. I mean, just call it what it is, right? As I see it. So that's kind of, you know, that's the skinny on Bitcoin, and we're trying to get back into that 1 week bull flag, right? That 1 week bull fliggity, the bull fliggity, right? And if you don't know what a bull flag is, I'll show you. The bull fliggity, baby, that bull fliggity, right? So let's see what's happening on the daily chart. Let's see what's happening on the daily, because we know we're super overbought, right? We get that. There's a red dot printing on market cipher, probably. Actually, there's probably a green dot because it always throwing false signals. Look at that. Yeah, I called it green dot. Yeah, we'll see. We'll see what happens here. But in any case, market cipher is a very powerful indicator. I don't say that to minimize market cipher. Market cipher is a great indicator. 4-hour chart. See what the oscillators are oscillating. Is the oscillators oscillating, man? Yeah, I mean, this 4-hour chart looks like a turd, you know? Like, it looks like it wants to come down here. 73.6. Rounded top, boom, blap, right back down to refill the range. Let's pull a fixed range. Just out of curiosity, right? $86,750, dude. You're outside of the range. You get sucked back into it. You lost it again, set lower lows. I mean, this, in my opinion, it doesn't look super bullish, but there is bullish potential here. You have regained the 50 on the 4-hour chart, the 50 moving average, this blue line right here. You got a rejection at the 100. If you lose the 50 again, you're likely to come down here and you're going to retesting the 21 SMA at about 82.5, right? So that's fine. Oscillators, let's see what they're oscillating. No, I mean, they're not setting like low, like highs, like up here, you know, so the oscillators are kind of reset to a certain extent. Let's see what the Stoke, yeah, Stoke is super high. And you're setting higher highs or higher lows. Yeah, it's a hidden bearish divergence right there. Setting higher lows, but you're setting lower highs on the oscillator. Yeah, I mean, that's a hidden bearish divergence. That's all that really is. No, it's not. I don't like it. I wouldn't call that a hidden bearish divergence. I don't see anything there. There's nothing there. Okay. Check the 4-hour. I mean, there's nothing here that's like, you know, if you come down here and you get under the 50, you're going to get a signal line crossover, and you're probably going to come back down here to about the 30 line. Last time you did that, you were like right here, right? And then you did this. Boom. You went from about, I don't know, what is that? 92.5 to about 76. I mean, that's a massive dump. That's 16 grand or 6 grand. So no, that is 16 grand. Jesus. $95,000 all the way down to 77. That's 18 grand, man. That's a massive dump. Yeah, if you get a rejection here, that could be bad news. Last time you got a rejection at the 100, boom. Last time you got a rejection at the 200, boom. 100, boom. You know, like you could be getting a rejection at the 100 and the 50 here, not getting above it. I mean, this is showing weaker strength. You're coming up here. You smash through all of these moving averages. You get a perfect rejection at the 200. Then you come down here and you see, okay, cool. We try to catch our legs. Boom, you get a front run rejection at the 200, but you did get a confirmation candle above the 100. Then the next time you tested it, you didn't even get close to the 200, and you never got a confirmation candle above the 100, and then boom, subsequent dip. Now you can't even get above the 100 moving average. Boom, you haven't got a confirmation candle. I mean, probably gonna fall. You know, that's just what probabilities say, right? But in any case, let's look at the daily chart. I want to see what's happening with the daily. Yeah, I mean, the daily chart, you've got, RSI starting to trend up. That's good news. It just left overbought or oversold territory. Where's the stochastics? Again, stochastic trending up. It is setting lower highs, right? That sucks. But in the same scenario, you're setting lower highs on the price. So that's not super bearish or anything like that. Are we setting higher lows? No, not really. It's not really much to see on the daily chart, to be honest with you. 21 moving average is at $87,000. Yeah, so I mean, $85,800 to $87,000 is going to be a really critical range. You start reclaiming that, that's where you can start longing to about $91,000. And then if you can reclaim $91,000, that's where you can start thinking about taking out these highs, right? These highs at about 96, 95, and then, legging up to the $100,000 range. That's the scenario on Bitcoin right now, essentially. Let's get into some gold really quick. We have 0 comments in the comment section except for from Buemio. Your fundamental analysis yesterday was very helpful. I am reading John J. Murphy, and your teaching of real markets and the application of the material in real situations makes it easy to understand. Man, I appreciate that, bro. I really do. And that's why I want to give people these free resources if they happen to give a F about them, right? Because it'll help you. It really will. And that's the whole point of why I do this, right? So inside of verified investing, if you go to, well, you can't see this, but in any case, I can because I'm involved in it, right? If we go into Advanced Traders Insights, during the blood moon last night, what I showed people was this, right? We took a huge win on our scalp long last week. We know what that was. That was right here. Boom, baby. Boom. Boom. Massive profits. We took profits here and we took profits here. Massive, massive move, right? Now, what I said was, hey, look, there's a bearish divergence on the one-day chart here. And there's this massive trend channel, right? That we're just riding the crap out of the top of it. Okay? So, boom, it dates back all the way to, October, late October, right? Came down here, bounce, boom, right? This is our third touch point right here. And I said, hey, if we get a rejection here, we're probably coming back down here to at least $29.53, probably more or less to the $2,900 range, and things of that sort, right? So essentially what I saw, if you look at the RSI, look at that. Lower highs, right? But in that same scenario, what are you setting? Higher highs, right? What is that? It's a bearish divergence on the one-day chart. Right? So where could you be pulling back to? Well, at least $2,900 potentially, and potentially even further than that to about $28.34, or even all the way down here to the bottom end of that trend channel, about $27.50. $27.50. So that's what I'm seeing on gold right now, right? So gold, if we go to the 1-hour chart and we zoom out a little bit, you can also see that we were in super, super overbought territory. Bam. We might come back, we got a signal line rejection here, signal line rejection here. Are we going to get another signal line rejection and keep this trending downwards? I think we possibly could on gold because, whenever you make a big move like what gold made, you got to let those indicators kind of like heat off, right? Like cool off, not heat off, right? Right here, you've got a fair value gap too. right? This is a fair value gap. That's all that is, right? This is the gap right here to right here, right? So, I mean, this is telling you no matter what, you're coming down to 29.65, right? So that's fair value gap. Basically, you know, the price in between these two candles wicks, right? This is a fair value gap, okay? And that's like textbook fair value gap. And guess what's right in that gap? 50 moving average on the 100, or 50 moving average on the hourly chart, right? So this is where I entered a short. 29.95, right? Our target, first and foremost, is right here. It's a 2x risk to reward, whatever. But if we can take this out, which I think we will, right? If we move down. I'm not saying I'm guaranteeing that we're going to take this out. I'm saying if we move down, I think we're going to take this out. What's likely to happen is we'll probably come, you know, more close to, you know, down to here, or at the very least, these 100 and 200 moving averages for a 4x risk to reward. Now, you start losing those, boom, you come right back down here to this pivot point, right? That we entered and took 2 profitable longs on. As you can see, here's the long. Not there. That's it. You know, you come back, retrace to the scene of the crime, boom, blast off, right? And then you reset all these oscillators that are super oversold, right? Overbought. And then you can continue on your next leg up, right? $3,000, $3,005 on gold. Pretty crazy. It's a really good move up, in my opinion. Market Cipher B also printing a red dot, right? Money flow starting to trend downward, right? Now we are going into the weekend. The market will close here in about 4 hours and 15 minutes. So I'm going to have to make a decision on whether we hold this short over the weekend and let Trump do whatever Trump does and scare the markets again to where gold gaps up and then stops us out, essentially. I don't know. We'll have to take that as it comes. But in my opinion, gold is most likely going to be coming down, you know, somewhere in this range to, you know, and if you check the swing high to the swing low, or the swing low to the swing high right here, the 0.382 is right at that, you know, $2,950 range, right? So there's that. And then you've got the full retrace all the way down here, right? But then if you look at the micro swing low to swing high, right, which is this right here, you can also see that the 0.618 is at about $2,900, right? And the 0.5 is at $2,920, which is right under the 200 moving average, right? So if we come down here and we bounce off of this 200 moving average, boom, start blasting up, and this is a good trade, right? This is a good trade. So I gave this obviously last night at like 8 or 9 p.m. Last night, but you know, whatever. It is what it is. So I can't give everybody everything all the time, right? Where's my other cup and handle? Broke out, perfect target, perfect everything. Bing bang boom. Bang bang, right? Another absolutely astronomically massive win. 84% win rate inside of the Advanced Traders Insights, inside of verifiedinvesting.com. And now you're seeing the market doing this, right? Is it getting too hot, right? Does it need to cool off? Maybe. I don't know. We'll see. Are we going to get a rejection here at the 200 moving average on the daily chart? I don't know. That's right around 84,000 some odd dollars, right? Let's see what it is at. Trying to reclaim it right now. Trying to reclaim it right damn now. So in any case, you kind of understand, you know, where you can be entering long positions and where you should be entering short positions, right? So let's get back down to the hourly chart and I'll show you where you can enter a short position. Because we want to give you both sides of the coin, right? So again, we know that this is our level. Like once we get above this, because of this bear pennant, because of this inverted head and shoulders, because of this kind of, where's that? Fibonacci, boom. We know that once we get above this level right here, this is where we want to start entering, right? Boom. Okay, long. Now, once you fall below this 0.382, which is about $83,650, if you fall below that over here, that's where you want to start thinking about short positions, okay? So let's do that. And then we can get you onto your Friday Pie Day. So you fall outside of this channel, boom, you put your stop loss above it, bam, done, easy. And then we target the lows. It's very simple. Target the lows and beyond. That's a 3x risk to reward. This one is a 1.5x risk to reward, which isn't as great, but I don't know why you would set your stop loss that far out, so you'd get a 2x risk to reward if you set it there. So with that being said, nobody wants any altcoins. We've had like literally, I think this is the lowest amount of participation that we've had in a stream since I started them. But with that being said, hopefully everybody has a good hashtag Friday Pie Day with their beautiful families. Boom, baby. Hashtag Friday Pie Day. Remember those levels. If you don't remember those levels, rewind the track, go check them out, and we will see how this plays out over the weekend. I am going to get off of here because I have another stream that I have to do for the Wolf for Finance people in about 10 minutes. I need to go to the bathroom and do some things before I do that. So everybody have a wonderful rest of your day and have a wonderful weekend. I will see you all soon. Peace.